Hello everyone and welcome to another session of CL4 company law or corporate law lecture series. Today I am going to take you through some very important information and tips that are needed for your upcoming examination in the CL4 subject. So today's lecture is going to be more of one that I am going to give you instructions and guidelines on how you have to face your paper, and thereafter I am going to also discuss the last March 2021 examination paper, so that I can give you some tips and show you how to answer the question paper. So let's look at, first of all, the learning outcomes that are expected out of your subject by the Chartered Institute of Accountants of Sri Lanka. Now when you take the subject, and in the course unit of corporate law, this is how the lineup has been designed for you all to answer your question paper. And out of all the lectures that I have conducted, I have covered almost everything here. So I am confident enough that you all can provide some very good answers based on the lectures that I have conducted. But however, since the questions will be asked in different ways, no matter what, you know what are the areas that you need to pay attention in answering, and all these questions cover the areas that we have already dealt with in this lecture series. So for that, you need to look at all the lecture series lectures that I have conducted this year and last year, and all these material sources are available in the website of the Chartered Accountants, and you can look at all my lectures, not only the ones that I did recently, but also the all lectures that I have conducted for this course. Now, these are the areas that you are going to get your questions. Firstly, the features of a company and corporate personality. You are getting 10% of the weight, the entire question paper, and you have to allocate like 25 hours during the entire lecture series for the year leading up to this subject. So you will get a question based on this area, and then on the incorporation of a company, I have dealt with the common law as well as the statutory law pertaining to this area. So you need to look at all the lectures that I have done. Then equity and debt capital, directors, company secretaries, auditors, I have extensively dealt with this area. Then meetings, resolutions and company records also I have extensively dealt with. The winding up processes, I have extensively dealt with this area as well. Then on the minority rights of shareholders, companies other than private limited companies, such as the public companies, companies, guaranteed companies and so forth. Then listing of a company in the Colombo Stock Exchange and other laws adjacent to corporate law, like the Foreign Exchange Act and the Lands Alienation Act, which I will also deal with today with the questions that we are going to have a look. Now you will see that these are the areas that we have covered in the features of a company and corporate personality, the law governing companies in Sri Lanka. The learning outcome for you is that you would be able to now identify the law governing companies in Sri Lanka, and you have to have specific knowledge on that law governing companies in Sri Lanka. And as a learning outcome, you have already obtained the knowledge on explaining the general features of a company registered under the Companies Act, including the new features. And then you have to have a specific knowledge of general features of a company registered under the Companies Act, including the new features. Then definition of a company, characteristics of a company. You have now gathered the knowledge of defining the term company, which I have extensively dealt with. So now you need to have the specific knowledge of definition of a company. Then explaining the characteristics of a company, where you have to have specific knowledge of the characteristics of a company. Then explain the advantages and disadvantages of incorporation, where I have taken out the models in partnerships, proprietorships, as well as the companies. So you should have the specific knowledge on the advantages and disadvantages of incorporation in particular. Then the concept of corporate personality, where we also discussed many areas in this with the relevant case law, like the Solomon versus Solomon and Company. So you have obtained already the knowledge in explaining the concept of corporate personality and its legal consequences. You should have the capacity now to answer in relation to concept of corporate personality and its legal consequences. Then explain instances where the concept of corporate personality is applied with relevant cases, and to have a specific knowledge on the instances where concept of corporate personality is applied with relevant cases. Then explain the concept of veil of incorporation, also an area that we have extensively dealt with in our lectures. You must have specific knowledge on what is a veil of incorporation, what is the veil of incorporation, and how can it be pierced in certain circumstances. Then to explain the situations where the veil of incorporation can be lifted with relevant cases, as I mentioned, and to have a specific knowledge on situations where the veil of incorporation can be lifted with relevant cases, because you know already that the court will not just, for the sake of lifting the veil, will not lift the veil or pierce the veil, but the court should be overwhelmingly convinced to do such a thing. Then on the incorporation of a company, the types of companies that we have discussed, and you have learned how to explain the different types of companies recognized under the Companies Act, and to have a specific knowledge on the difference between the different types of companies recognized under the Companies Act, including foreign companies doing business in Sri Lanka and listed companies. Then on the incorporation of company, explain the process involved for registration incorporation of a company. I have dealt with the statutory provision, the provisions in the Companies Act. So you should be able to specifically now provide the process involved for registration of a company. Then explain the process and restriction in selecting a name, where the process and restriction in selecting a name have been dealt with, and you have the specific knowledge on that. Then state the types of forms to be submitted to the ROC and their contents. The forms. So you need to know the forms to be submitted to the ROC and their contents. Then explain the documentation involved for registration of a company, both public and private companies, and explain the process of changing a name of an existing company. So the documentation involved for registration of a company, whether it's public or private, you should have a thorough knowledge. Then on the promoters, explain the rights and duties of promoters, including liability for pre-incorporation contracts with relevant cases. As you know that the common law situation is now being altered by the Companies Act. So you should know the rights and duties of promoters, including liability for pre-incorporation contracts with relevant cases. Then explain remedies for breach of duties by promoters. And you must have specific knowledge on the remedies of breach of duties by the promoters. Then discuss payments to promoters, the payments to promoters, how payments could be allocated to the promoters and paid by the company. Then on the articles of association, we have very thoroughly dealt with. You need to now have the learning outcome to explain the contents, amendments to the articles of association, and then having a specific knowledge on the contents, amendments to the articles of association. Explain the nature, purpose and legal consequences of the articles of association, and to have a specific knowledge on the nature, purpose and legal consequences of articles of association. Then on the company contracts, explain pre-incorporation contracts, implied warranties and ratifications that we have done. So you should have the capacity of attending to the pre-incorporation contracts, implied warranties and ratification. Then explain method of contracting and authority of directors, officers and agents. So method of contracting and authority of directors and officers and agents, specific knowledge you must have by now. Then explain the Indo management rule and the doctrine of constructive notice. You remember Turk 1 case, and so you can have the specific knowledge on Indo management rule and the doctrine of constructive notice. Then on the equity and debt capital, types of shares, allotments and issue of shares. We have done with the outcome where you can explain the types of shares with reference to stated capital regime, classification, risk, variation of class rights, distributions, dividends, voting rights, priority in a winding up and so forth. And then you should have the specific knowledge on types of shares with reference to stated capital regime, classification, risk, variation of class rights, distributions, dividends, voting rights, priority in a winding up. Then also we have covered to understand, explain and contrast the procedures for the issue of shares, including initial bonus and rights issues and prospectus. With having a specific knowledge on the procedures for the issue of shares, including initial bonus and rights issues and prospectus. Then the distributions and dividends. We have learned how to explain the procedure for payment of dividends, procedure for payment of dividends, explain the solvency test and the capital maintenance mechanism. Solvency test and the capital maintenance mechanism, something that you have to have a specific knowledge of. Major types of share dealings in a company. You are able to explain the following principles in relation to capital maintenance in a company: redemption, reduction of capital, financial assistance, share buyback, minority buyouts and so forth. And thereby having specific knowledge on the principles in relation to capital maintenance in a company: redemption, reduction of capital, financial assistance, share buyback and minority buyout. Then on the debt capital, explain the following principles in relation to long-term debt capital: classification, risk, interest payments, rights, priority in winding up. having a specific knowledge on principles in relation to long-term debt, capital, specification, risk, interest payment, rights, priority in winding up. The rights of shareholders and debenture holders. You know now how to state the rights available for shareholders and debenture holders, and thereby having specific knowledge on state the rights available for shareholders and debenture holders. Now, if you look at the directors, company secretary, auditors, role of directors, you should be able to explain the following in relation to the directors of a company: their appointment, retirement and removal, powers, duties, disqualification. Having specific knowledge on the directors of a company: appointment, retirement, removal, powers, duties and disqualification. And also you should be able to explain the division of power between directors and members, with specific knowledge on the division of power between directors and members. Then on the role of secretary, state the role of a company secretary along with the panorama case, which we have done. The role of a company secretary along with the panorama case, process of appointment of the company secretary and the relevant qualifications. Then you will be able to explain the process of appointment of the company secretary and relevant qualifications with the specific knowledge of process of appointment of secretary and relevant qualifications. Then on the role of auditor, appointment and removal of auditor as per Companies Act, and to having a specific knowledge on the appointment and removal of the auditor as per the Companies Act. Then meetings, resolutions and company records. Different types of meetings are there, as you know, and you have a knowledge on how to explain the different types of meetings in a company, purposes and notice periods. Having specific knowledge on the different types of meetings in a company, purposes and notice periods. Then prepare a notice for shareholders meeting, AGM, EGM, which we have thoroughly done, and you would be able to prepare that notice for the shareholders meeting, whether it's AGM or EGM. Then different types of resolutions. You know how to explain the different types of resolutions which could be passed by the members of the company and the notice period, like special resolutions, general resolutions and so forth, and having specific knowledge on the different types of resolutions which could be passed by the members of a company and the notice period. Then having knowledge on how to prepare different types of resolutions, appointment and reappointment of directors, declaration of dividends, and having specific knowledge on the different types of resolutions. Example, appointment and reappointment of directors, declaration of dividends. Then with regard to company records, you have a knowledge on list the company records stipulated in the Companies Act, and having specific knowledge of company records stipulated in the Companies Act. Then explain the provisions relating to the annual returns that should be filed with the Register of Companies ROC, having specific knowledge on the annual returns that should be filed with the Register of Companies. Then explain the legal provisions contained in the Companies Act number 7 of 2007 in relation to financial statements. Also we have done very recently, we did that. Then you are having specific knowledge on the legal provisions contained in Companies Act number 7 of 2007 in relation to financial statements. Then going to winding up, in that you know the compulsory and voluntary winding up processes and how to differentiate compulsory and voluntary winding up and explain their consequences. Compulsory and voluntary winding up and explain their consequences, you must have specific knowledge. Then to explain the process of winding up and the process of winding up, you should have a thorough knowledge on that. Then the functions of parties involved in winding up, outline the functions of administrator, liquidator, receivers and so forth, and to have a specific knowledge on the functions of administrator, liquidator, receivers. Then on the minority rights, the majority rule, as you know, explain the principles relating to majority rule and having a specific knowledge on principles relating to majority rule. Then on the operation and mismanagement, explain the principles relating to operation, principles relating to operation, explain the principles relating to mismanagement. You must know how to differentiate operation and mismanagement in different cases. So, having a good understanding, knowledge of the principles related to mismanagement. Other safeguards, the major transactions, section 185 of the Companies Act that we have done, and having a good knowledge on the major transactions, the section 125 of the Companies Act. Then on the minority buyout rights, having good knowledge on the minority buyout rights. Restraining orders, interim orders that can be obtained from court under section 233, 521, and having a good knowledge on what are these restraining orders and interim orders under those sections. Then to explain derivative action and having a good knowledge on what is a derivative action. Then explain the provisions in the Companies Act relating to the ratification of share register, and how to rectify the share register. Then other companies other than private limited companies, we have dealt with companies limited by guarantee. So the features of companies limited by guarantee, where you need to have specific knowledge on companies limited by guarantee, and users of companies limited by guarantee, having good knowledge on the users of companies limited by guarantee. Then on the overseas companies, the formation of overseas companies, how to form an overseas company. Then on the financial statement, serving of notices mentioning of company name, financial statement, serving of notices mentioning of company names, and so forth. Then on the listing of a company in the Colombo Stock Exchange, when the company reached the threshold of being a public limited company, PLC. So the stakeholders of listing, Colombo Stock Exchange, Securities and Exchange Commission, Central Depository System, and features of companies limited by guarantee. We have not that much dealt with this area, but I hope to cover that area as well. And then to give you specific, for you to have the specific knowledge of the Colombo Stock Exchange, Securities and Exchange Commission, Central Depository System, and features of companies limited by guarantee. Role of stakeholders, advantages and disadvantages of listing. Then the listing process, main board and the reserve report, debt listing, continuing obligations, the corporate disclosures, periodic reporting, corporate governance, and so forth. Then on the other laws adjacent to the corporate law, the Foreign Exchange Act number 12 of 2017 state the inward investments limits for companies, because I see that most of these questions come in the multiple choice question, MCQ, and then state the outward investment limits of companies. So when I was discussing several papers, I have dealt with these areas. Then again on the land restriction on alienation act, explain the restrictions on transfer of land, especially when it comes to foreign transfers to foreigners. Then explain the responsibilities of the company secretary under this act with regard to share transfers and so forth for foreigners. So this is actually the learning outcomes after which you need to obtain the knowledge having gone through the curriculum, which continues even for your exam this time. Now let me thereafter take you through the 2021 March examination paper. And as you know that there is this instructions to candidate which you have to really go through them properly in order to understand what is required by you. So, do not rush into the paper when you obtain it at the exam. As it is stated here, you can allocate for reading and planning 15 minutes first of all. And I would suggest you that when you get a paper, read for the first time very clearly, just reading only, that is the first reading. Then in the second reading, you must read again from the top to bottom and identify what are the more convenient questions for you all to answer first, and just mark them 1, 2, 3 like that. And then again in the third reading, you must select which question that you will take first, second, third likewise, and then start writing, because for writing you have 3 hours. 3 hours. And you would see that you have to answer all the questions because it is compulsory. But even though they are all compulsory and you need to answer everything, my suggestion is that that you should first of all select the best question that you are more confident with, and then go on like that based on your competence and convenience, because that would give you more and more strength and confidence as you go by with the answering of the paper. Because I have seen sometimes students, they are just straight away going in accordance with the paper 1, 2, 3, 4 like that, and then if the first question is quite tough or the second question is quite tough, then they are losing a lot of time in gathering facts to answer the questions. So that is why I tell all my students especially that select the more easiest question first, so that it would make you more confident to answer as you go by. And also make sure that you answer all the questions. So by the time that you finish answering all the questions, you will feel more comfortable, because even though you may have faced a difficult question, but difficult question is answered at last, where you will regret for nothing, since you have answered quite pretty well the questions that were easy to you. And the paper consists of 3 sections. The section 1 allocates 10 multiple choice questions MCQs, section 2 4 questions, section 3 2 questions. So answers to all the questions would be in the answer booklet given to you. If it's online, then there is a system that is followed. And in the answers to question 1, the MCQ, the most appropriate answer, you have to select A, B, C, D should be entered in the answer booklet against the relevant question number. Begin each answer in section 2 and section 3 on a separate page in the answer booklet, so that when you are answering the more easiest question and going to the difficult question, you will not have any problem, because you allocate a new page, a separate page, to start with one question. The examination may be conducted as open book examination, and only on the following publication will be permitted to be used as the examination hall, which is the Companies Act 7 of 2007. So every student is expected to have a copy of the Companies Act 2007, and I believe that you can find it in the website, and also in any other website you can find the Companies Act of 7 of 2007. But if you are subscribing from the web, make sure that you subscribe the 7 of 2007 Act and not the earlier one, the 17 of 1982 Act. Make sure that you have the new Act, number 7 of 2007. So if you are searching for the Companies Act of Sri Lanka, you need to give the command that you are looking for number 7 of 2007. And candidates are allowed to use above permitted publications subject to the following. The number of publications have been set out. So for online exams, there are certain other instructions being given. You need to carefully read through how and what you can take use of. And the notes, textbooks, materials, publications, photocopies, extracts will not be allowed. And your answer should be the English language in the answer booklet. So don't use any other language even to clarify, because the examiner will be looking at how you answer the questions in English language. Now let us go to section 1, which is the multiple type question, and there it says all questions are compulsory. Total marks for section 1 is 20 marks because you are getting 10 questions, 2 for each, and recommended time for the section is 36 minutes. So it's a recommended time, it's not compulsory, but if you finish early you can go to the second section, or you may even leave certain questions that you are not so sure to answer them later when you come back after answering the other sections. So if you still have time, you can do the rest. Now let's start with a question. Shane agreed in writing with Basil to sell Shane's land to Basil, but subsequently Shane changed his mind about selling this land. In order to void the contract with Basil and Shane formed the company. In order to void the contract with Basil, Shane formed a company by the name of Lands and Lands Private Limited, LLPL, of which he became the sole shareholder. Thereafter, Shane transferred this land to LLPL and refused to fulfill the contract with B. Now, before we go to the answers, let me just give a clarification here that when Shane has agreed in writing with Basil to sell Shane's land, obviously there is a contract being made there, that there is an offer given by Basil to the land and Shane has accepted as offeree. So an agreement has been reached between Shane and Basil. So now what Shane is going to do is a quite tricky thing that he doesn't want to. He has changed his mind and doesn't want to sell his land. So what he has done is he has formed a company by the name of Lands and Lands Private Limited, and now transfer Shane's land to that company, and also he becomes a sole shareholder. He is only one. After becoming the sole shareholder, he transferred the land to this company. So he thinks that he can refuse to transfer this land to B in line with the contract that he has entered with Basil, because he can say that now the land is owned by a company and that he cannot take a decision as of his private land, because the company is a different and separate person from Shane. Now what you are requested here is to find out the most appropriate answer, the most accurate advice that you could be given to Basil in this situation. So what is the most accurate advice that you can give to Basil in this situation? Now let's look at these things. A, as Shane and LLPL are two separate legal personalities, and as the land now belongs to LLPL, the contract between Shane and B can no longer be implemented. Now, it is true that since the company has a separate legal personality and the land is now belong to company, Now what we have to see whether the contract between Shane and B can no longer be implemented because of that. Secondly, answer B, even though Shane and LLPL are two separate legal personalities, where Shane is a natural person, LLPL is a legal person, since LLPL was formed to void the contract between Shane and Basil, the courts may lift the veil of incorporation of LLPL and enforce the contract between Shane and Basil. Now that can be done only if Shane has acted as a director or shareholder of the company in a wrongful manner, thereby causing damage to the company. C, as the land now belongs to LLPL, B must enter into a fresh contract with LLPL and accept that previous contract with S has no status in the eyes of law. Now that cannot be done. That cannot be done because now the company will not come into a different agreement in this case. The only catch is against Shane. D is the courts are not known to lift the veil of incorporation in this kind of instance, and therefore there is nothing that can be done by B if LLPL does not agree to sell the land to B. The courts are not known to lift the corporate veil in this kind of instance, and therefore there is nothing that can be done by B if LLPL does not agree to sell the land to B. Now if you look at the suggested answers for this, that the correct answer here is B, because as I told you that the lifting of the incorporation veil can be done whenever a shareholder or a director has acted in a wrongful manner towards the company. Now what has happened here is that by letting this land be owned by the LLPL, Shane is really cheating the LLPL. He has already cheated B, Basil, but he is now cheating the LLPL. Since the land now is vested with the LLPL, it is what the land is what Basil has already entered into with S Shane to buy this, and now the land becomes a property of LLPL. So the poor LLPL is now becoming the victim of this entire transaction. So the court will not allow the LLPL to be a victim in such a situation. So in such a case, this is a huge, massive type of a fraud that would have taken place. So it is court looking at the gravity of the matter will definitely lift the corporate veil to find out who is the culprit here. And by lifting the corporate veil, the court can find, there is the Shane who is the shareholder. Shane is the one who broke the promise to B, not the company. So company can't be a victim. So because of this reason, the court has the full power to lift the corporate veil to find Shane as a shareholder in the company. And since Shane has breached his promise towards Basil, as answer B provides, it is the correct answer. Now let's go to the next question. Following an area the following are in relation to a company limited by guarantee under the Companies Act. Now you know what is a company limited by guarantee. So now let's see like the statements here first of all. If it is formed for the purpose of promoting sports, it is permitted to dispense with the word private for its name. Is that correct or wrong? Because company limited guarantee does not provide for such an inclusion. Second one, it can issue shares to the public through a listing in the stock market. Company limited by guarantee won't give such thing. Its members should give an undertaking at incorporation to contribute specific amount in the event of being liquidated. That is correct. Then it can distribute dividends to its members under special circumstances. That's also correct. Sorry, it's incorrect. So now let us look at the answer is C, as I told, because only the third one is correct. That here, its members should give an undertaking at incorporation to contribute a specified amount in the event of being liquidated. Let's look at the third one. Larry formed Flight Private Limited, a company in which he held the entire 100% of the issued share capital. Larry formed Flight Private Limited, a company in which he held the entire 100% of the issued share capital. He was also employed by the Flight Private Limited as its chief pilot. During the course of his employment, Larry was injured in a plane crash and he sued FPL, the company, claiming compensation. Is that proper or can be done? Yes, because Larry and Flight Private Limited are two different entities. Larry is a natural person, whereas Flight Private Limited is a legal person, though Larry holds 100% of the shares. Now what you are required to do is choose the most accurate advice that could be given to Larry in this situation would be the most accurate advice that you could provide to Larry. According to Companies Act 7 of 2007, since Larry is the sole shareholder of FPL, he cannot be employed by FPL in the first place, and as a result FPL is not bound to pay him any compensation, which is wrong. Second, even though Larry and FPL are two separate legal personalities, as Larry owns 100% of FPL, the Companies Act 7 of 2007 does not allow FPL to pay compensation to Larry. That's also wrong. See, as Larry and FPL are two separate legal personalities, Larry can enter into an employment contract with FPL, and as a result, Larry can claim compensation from FPL in this instance. Correct. As Larry owns 100% of FPL, the courts will lift the corporate incorporation in this instance. As a result of compensation to L will be refused, as Larry and FPL will be treated as one. No, because here Larry has not done anything fraudulent for the court to lift the corporate will. So therefore, you can see that question number 3, the answer is C. As I mentioned, the answer is C. As Larry and FPL are two separate legal personalities, Larry can enter into an employment contract with FPL, and as a result, Larry can claim compensation from FPL. In this instance. Then the fourth one, Expansion Private Limited, a company incorporated in Sri Lanka, intends to set up its first overseas office in Singapore. Expansion Private Limited is a incorporated company in Sri Lanka, and it intends to set up its first overseas office in Singapore. The Expansion Private Limited EPL also intends to open an outward investment account OIA at a licensed commercial bank in Colombo so that it can transfer some certain money for the use of its office in Singapore now. The Foreign Exchange Act 12 of 2017 imposes a limit on the amount that can be remitted out of Sri Lanka by EPL per calendar year towards the operation of this overseas office, and you are asked to provide the correct amount that they can dispense out of the outward investment account. Now, I will take you through the Foreign Exchange Act. Now, this is the Foreign Exchange Act number 12 of 2017. The Foreign Exchange Act, if you go through, all these details are provided with regard to these foreign exchange matters. Now we are going to find out, as per the question, what amount that can be transferred to the outward account as per the central bank regulations. Now you see in this section 5, it says any person in or resident in Sri Lanka who holds foreign exchange in a bank account in Sri Lanka outside Sri Lanka owns any foreign asset may utilize such foreign exchange of foreign assets for making any payment for in respect of any current or capital transaction of such person within or outside Sri Lanka. Any such payment made from foreign exchange held by those such person within Sri Lanka shall be made through an authorized dealer to the extent specified in the permit through a restricted dealer. That is with regard to foreign exchange or foreign assets held or owned by a person in or resident in Sri Lanka. Now, with regard to the question that has been posed, looking at this thing, the section 6 says the current transaction a person shall be entitled. A person will include also a company, make sure. A person shall be entitled to deal in foreign exchange for current transaction of such person through an authorized dealer or to the extent specified in the permit through restricted dealer. An authorized dealer or restricted dealer may deal in foreign exchange for current transaction as a principal or an intermediary, so and so forth. The regulation of certain transaction. A person or in or resident in Sri Lanka shall export from Sri Lanka or import into Sri Lanka any foreign currency or currency, Sri Lankan currency. Hold foreign currency in his possession or in a bank account in Sri Lanka. Only for such purpose up to such limits and subject to such terms and conditions as may be prescribed by the minister or published in the Gazette. Now further it says that a person or resident in Sri Lanka shall acquire foreign assets from foreign exchange derived from the conversion of Sri Lanka account currency or the disposal or conversion of an asset within Sri Lanka or provision of any service in or from Sri Lanka only for such purposes. Now in this question, it is for the use of the Singapore office up to such limits and subject to such terms and conditions as may be prescribed by the Minister of Finance by regulation made in that behalf. Notwithstanding anything to the contrary in the provision of any other written law, any Sri Lankan citizen resident in Sri Lanka who remits Sri Lanka any foreign exchange which have not been declared to the Commissioner General of Inland Revenue or Head of Department of Foreign Exchange before appointed date, and which are not property in respect of which proceedings are pending in a court of law or order has been made by court of law under Prevention of Money Laundering Act number 5 of 2006, Convention on the Suppression of Terrorist Financing and so forth. And provided that any such person who remits to Sri Lanka foreign exchange not exceeding the value of $1 million United States dollars held outside Sri Lanka shall not be liable to pay remittance fee or any other tax surcharge or levy penalty. Any amount remitted exceeding such value shall be liable to pay remittance fee specified in subsection 3. Now you see section 28 is a very important thing, because it says that where any regulation or order made under this act is required to be published in the Gazette, and then under the regulations from time to time that the monetary board has the power to set and determine the amount that is to be set for this kind of transaction to be made. So getting back to our question, according to the presently valid regulation that has been gazetted under the Foreign Exchange Act number 12 of 2017, the amount that can be put into the outward investment account is actually USD 300,000, United States 300,000 or its equivalent amount. So here the answer to the question is B. The amount is 300,000. So this particular amount has not been given in the act, but in accordance with the regulation that has been gazetted, this amount has been set forth, because from time to time it can change as per the decision of the monetary board. The decision, the amount can be changed. So that is why at present the amount that is given is 300,000. Now next question, given below is legislation pertaining to company law in Sri Lanka and overseas. Given below is legislation pertaining to company law in Sri Lanka and overseas. Company Special Provisions Law 19 of 1974, Foreign Companies Special Provisions Law 9 of 1974, New Zealand Companies Act 9 of 1993, the Canadian Business Corporation Act of 1984. Now what are these things? These are, they say, given below is legislation pertaining to company law in Sri Lanka and overseas. Now when the question is, when drafting the Companies Act number 17 of 2007, which of the above were used as guidelines? Actually in Sri Lanka, what we used is the New Zealand model and the Canadian model. And in the answer, you will see that it's correct. D is the correct answer. Number 3 and 4 are the correct answers. So D is the correct answer there. Next question, XYZ Limited is a company incorporated in Uganda. So XYZ Limited is a company incorporated not in Sri Lanka but in Uganda. It has been registered in Sri Lanka as an overseas company. So it has been registered as an overseas company in Sri Lanka under the name ABC Limited. So it's not XYZ but under a different name, ABC Limited, as an overseas company. Thereafter, the company had purchased furniture for rupees 1 million from Don Saman, a leading furniture manufacturer from Moratuwa. The company has, the overseas company now registered in Sri Lanka, had purchased furniture for rupees 1 million from Don Saman, a leading furniture manufacturer from Moratuwa. As company has not paid the Don Saman for this furniture, he intends to send a letter of demand to the company. Letter of demand is a document sent by a lawyer demanding the debtor to pay to the creditor the amount that the debtor owns towards the creditor. So here the furniture have been bought by the overseas company registered as ABC Limited, and the Don Saman, who has provided the furniture worth 1 million to this overseas company, has not been settled its amount, and it now intends to send the letter of demand to the company. He is certain, however, as to which name of the company the letter of demand should refer to. So, the letter of demand is to be sent by Don Saman's lawyers to the purchaser who bought this furniture for 1 million rupees, that is the ABC Limited. So, ABC Limited is the one that purchased the goods in Sri Lanka. XYZ has nothing to do with it. But since it's an overseas company of XYZ, that is our main question here, that to see that even though you can see here that answer is B, because XYZ being the parent company in Uganda would still not be liable, because ABC is a Sri Lankan company and Sri Lankan company is the purchaser here. So, whatever the style that it had been, like an overseas company, still the local company is the one that is liable here, because it is the company that has purchased from Don Saman the furniture worth for 1 million. So, the answer is that you need to sue the local company ABC Limited. Then the next question, which of the following statement is correct in relation to lifting the veil of incorporation? Which of the following statements is correct in relation to lifting the corporate veil of incorporation? Which of the following statement is correct? So, let us read the statements. Once the veil is lifted, the shareholders cannot be held liable for acts of the company. Now, why the veil is lifted actually is to see who are the responsible shareholders in that. Otherwise, the court will not lift the veil. So, therefore, the statement is wrong that once the veil is lifted, the shareholders cannot be held liable for the acts of the company. They are really liable for the company, because once the veil is lifted, the court will find out who the perpetrator is or who the perpetrators are. Now, second one, B, for the courts to lift the veil, at least 75% of the company's shareholders must petition the courts. There is nothing like that. There is nothing, no provision in the Companies Act that requires that for a court to lift the veil, at least 75% of the company's shareholders must petition, because even an outsider can petition the court to lift the corporate veil in order to find the perpetrator. So, both A and B are wrong. Then C, the court may lift the veil of incorporation from Sambol Private Limited when it was formed by Kamal in order to evade a contractual obligation of K. the courts may lift the veil of incorporation from Sunball Private Limited when it was formed by Kamal in order to evade a contractual obligation of K. Now, like the earlier question one we saw, here Kamal has incorporated the Sunball Private Limited in order to evade a contractual obligation that Kamal had for something, you know. So, in that case, the C seems right, but let us look at D also before we conclude as to what is the real proper question. In a situation where Murshid has incorporated a limited liability company to get the benefits of corporate legal personality, the courts may lift the veil in order to nullify that benefit. No, that is wrong, because anybody can incorporate a company, and also it is generally incorporated a corporate legal personality in order to obtain certain advantages or benefits. So, therefore, in such a case the court will not lift the corporate veil to nullify that benefit. So, the answer is C. Answer is C. Then the next one, which of the following is the most accurate statement in relation to a registered overseas company in Sri Lanka? Which of the following is the most accurate statement in relation to a registered overseas company in Sri Lanka? In relation to a registered overseas company in Sri Lanka. That means a company that is registered as an overseas company under the Companies Act. So, the Companies Act number 7 of 2007 prohibits such company from holding land in Sri Lanka in its name. Generally, an overseas company cannot hold land under the Land Restrictions on Alienation Act. But let us look at the other questions, answers also. When it, all the statements, when it ceases to have a place of business in Sri Lanka, it must immediately notify the registrar of that fact. When it ceases to have a place of business in Sri Lanka, it must immediately notify the registrar of that fact. Such a company is required to display the country of its incorporation in at least one place where it carries on business in Sri Lanka. Legal proceedings taken against such a company must always be under its name of incorporation overseas. Now, D is wrong, because legal proceedings taken against such company must always be under its name of incorporation overseas is wrong. Then let us look at C. Such a company is required to display the country of its incorporation in at least one place where it carries on business in Sri Lanka. That is also wrong. It is not required. B. When it ceases to have a place of business in Sri Lanka, it must immediately notify the registrar of that fact. When it ceases to have a place of business in Sri Lanka, business place have a place of business in Sri Lanka, which is also wrong in a way. It is not accurate, because an overseas company can be registered and have a place of business in Sri Lanka, and if it ceases, then that means that the company cannot exist anyway. Then the real correct answer is that no, it is the real answer, because the very purpose of letting an overseas company be present in Sri Lanka is by letting that company to give a business place, so that then the ROC would know, the registrar of company would know where the company is located. So, that means B is correct, because A is wrong, since it is not the Companies Act that prohibits such company from holding land in Sri Lanka in its name. It is the, as I told you, the Land Restrictions on Alienation Act that makes such prohibition. So, the most accurate answer there is B. Then question number 9. The scenario that incorporates a feature of a limited liability company as recognized by law, by company law, the scenario that incorporates a feature of a limited liability company as recognized by company law, that you have to identify which statement is correct. Now, A says company PQR has only one shareholder, the secretary to the treasury is this shareholder. Now, that is, if the company is a public limited company, it can have one shareholder and that shareholder be the treasury of the company. Company PQR has only one shareholder, the secretary to the treasury is this shareholder. That is possible. B, Nancy owns 10,000 ordinary shares of a company. Her liability towards the assets of the company is limited to twice the face of value of these shares, which is wrong statement. She only has liability to the number of shares that she owns, so not twice. C, Z who owned more than 75% of the issued share capital of company XY died suddenly of COVID-19. This result in the company ceasing to exist. No, it won't happen because the company has existence as it's a legal person. The company can exist even without such a majority shareholder, because the only thing is that then the Z's shareholding will be will go to an heir of Z, where the heir can thereafter obtain the 75%, the company will still exist. So that means statement C is wrong. Then statement D is, if company P has more than one shareholder, if company P has more than one shareholder, it must file action to sue its main debtor Piacena in the name of all its shareholders. No, that is wrong, because company has its own personality, so the company does not file any legal action in its shareholders' names, because company P can sue anyone in its own name as company P. So therefore, D is wrong. So the correct answer is A as shown before. Now, which option given below accurately fills in the blank? Section 2 of the Land Restriction and Alienation Act, number 38 of 2014 says that even though a company is incorporated in Sri Lanka, it cannot own lands in Sri Lanka if blank or more of its shareholders is either directly or indirectly by foreigner or foreign company. Now, the answer here they require is what percentage of shareholding that would not allow such a company to hold lands, foreign shareholders. Now let us look at the land restriction and alienation. It refers to section 2. Section 2. Now if you look at section 2, notwithstanding any provisions to the contrary in any other written law, the transfer of title of any land situated in Sri Lanka shall be prohibited if such transfer is to a foreigner or to a company incorporated in Sri Lanka under the company where the foreign shareholding in such company either direct or indirect is 50% or above, 50% or above, which means that the answer there then is B, right? If 50% or more of its shareholders is either directly or indirectly by a foreign or a foreign company. So the answer is B. So now with that, we will go to our second part, section 2. Now there are question 2. And here in the instructions you will see that all questions are compulsory. Total marks for section 2 is 40 marks. 40 marks. Recommended time is 72 minutes. Question 2. SVP Limited, which is presently engaged in tourism. SVP Limited, which is presently engaged in tourism, now intends to venture into agriculture research. SVP Limited presently engaged in tourism, now intends to venture into agriculture research. For this purpose, SVP intends to build a research center in Nuwara. As SVP needs to raise funds towards this new venture, its directors are exploring the option of listing the company on the stock exchange, stock market. Now, what is required to state is the 4 advantages of such a listing. When a private company or a public company, SVP Limited, is to be listed as a listed company in the Colombo Stock Exchange, and if it is to be listed, what are the 4 advantages that SVP obtain by listing it in the CSE. Now, I will go along the answer drafted so that you can have a better understanding. You see, advantages of listing on CSE. Listed securities are preferred by investors as they have better liquidity. For better liquidity, listing provides wide publicity to the company since its name will be mentioned in stock market reports, analysis in newspapers, magazines, TV channels, etc. Listing provides a company better visibility and improves its image and reputation. It makes future financing easier and cheaper in case of expansion or diversification of business. Growth and stability in the market is possible through broadening and diversification of the company's shareholding. Listing attracts the interest of institutional investors of the country as well as foreign institutional investors. Listing enables a company to know its market value, and its information is useful in the case of mergers, acquisitions to arrive at the purchase consideration, exchange ratios, etc. By complying with the listing requirements, the operations of the company become more transparent and investor friendly. Listing creates the possibility for releasing some of your investment. It provides access to acquisition currency and transparency around the value of the business. Listed companies often use their shares as opposed to cash to make acquisitions. This can be particularly useful when implementing a buy and build strategy when cash can be better utilized in other areas. Then listing encourages employee commitment by allowing them to be rewarded with something of clear value. Employees of listed companies who are given shares or options can see the value of their shares or options on any given day. And listing improves supplier, investor and customer confidence and improves company standing in the marketplace. So there are so many advantages, but you have been asked to answer only 4 of them, which, as I showed, you could take out of the list. Then they are asking about 4 disadvantages of a listing. And if you look at the answers, you will find the disadvantages of listing on CSE. The accountability and scrutiny. Listed companies are expected to comply with several rules and regulations. Undervaluation risk. Issuing shares is not only dilutive but shares can also lack liquidity at a fixed rate. This can undermine fundraising and acquisition activity if there is a lack of demand for the shares. In addition, a lack of demand normally translates into a low share price. So the users of shares as acquisition currency may also lose its appeal. On public markets, the share prices of companies are not only affected by their own performance, but also by the performance of the market and the economy as a whole. Listing of securities may induce management and top-level employees to indulge in insider trading by getting access to important information. Such actions can adversely affect the common security holders. The management might enter into an agreement with brokers to artificially increase prices before a fresh share issue and benefit from that. The public might be induced to buy shares in such companies, and ultimately the prices would crash and the common investors would be left with a worthless stock of securities. Listing requires disclosing important sensitive information to stock exchanges, such as plans for expansion, diversification, selling of certain businesses, acquisition of certain brands or companies, etc. Such information might be used by competitors to gain an advantage. Outsiders might acquire a substantial shareholding in the company and threaten to take over the company, or they might demand disproportionately high compensation to sell their shares. The management time and significant costs associated with offering an ongoing listing is high, so that you can take any of these four for your answer to this. Then the types of boards that are available on Colombo Stock Exchange for such a listing. The types of boards. So according to the answer, the main the equity securities of a public company can be listed on the following boards. The main board. This board consists of companies with a larger capital base. Dirisavi board. Medium to small companies and startup companies are generally listed on Dirisavi board. In addition to the above boards, the alternate market segment includes the following boards. The Empower board. This board is dedicated to small and medium-sized enterprises, SMEs. And multi-currency board, a foreign entity desirous of being listed on CSE can be listed on multi-currency board. So now you see that the examiner has noted that the candidates are not expected to explain the boards, but only to mention the names. The explanations given above are for clarity, so that if the candidate forgets the name of the board but explains the nature of the board, the allocated marks can be given. So this is a very good tip in that case. Now if we go to the next question. Papa Private Limited and Kiddo Private Limited are both companies incorporated in Sri Lanka under the Companies Act 7 of 2007. Now, KPL, Kiddo Private Limited, is a fully owned subsidiary of Papa Private Limited. So, Papa is the holding company, KPL is a subsidiary. And the articles of association of KPL are the same as model articles given in the first schedule of the Act. KPL intends to raise funds for its new solar power project by issuing 2 million ordinary shares at rupees 10 each to PPL. So it intends to raise funds for its new solar power project by issuing 2 million ordinary shares at 10 rupees each to its holding company PPL. These shares are proposed to be issued for a cash consideration. So it is to be issued for cash consideration. So you get the cash, from the subsidiary getting the cash from the holding company. Further, it is proposed that these shares will confer on the holder. It is proposed that these shares will confer on the holder, the Papa Private Limited, the holding company, the same rights as laid down in the Act. The previously issued shares to PPL2 previously as a subsidiary, Kiddo has issued to Papa, the holding company, 52 consist of the same rights. Now, explain with reasons the provisions of the Act which are applicable in this instance. With reasons the provisions of the Act which are applicable in this instance. So, now giving a detailed answer, you need to go to section 51(1) of the Act that says that subject to the provisions of section 52 and 53 and the company's articles, the board of a company may issue such shares to such persons as it considers appropriate, whoever. That means that these shares must be issued by the director board of KPL, as the shares are under control of the directors. Be issued by the director board of KPL, as the shares are under the control of the directors of the subsidiary. As KPL's articles of association are same as the model articles given in the first schedule of the Act, the rights that are conferred on PPL, the holding company, by these shares will be as laid down in section 49(2) of the Act. As per the shares to be issued to PPL, the holding company confers same rights as those set out in the Act under section 49(2), section 51(2) and section 51(3) do not apply in this instance, because section 52 and 52(2) allows the consideration of these shares to be in cash. So, this is how you need to answer. So, what is important is, as the shares to be issued to the parent company, holding company PPL, confer same rights as those set out in the Act under section 49(2). And 51(2) and 51(3) do not apply in this instance. Then the next question is the steps to be followed in issuing these shares. The steps to be followed. Steps to be followed in issuing such shares are like that. Section 52(1) says that before issuing these shares, the board must decide on the consideration for the shares. What consideration? That you are getting, or what you have to obtain from the parent company. This has been indicated as ₹10 per share totaling to 20 million. Further, section 52(1)(b) says that the board must decide that in the opinion this consideration is fair and reasonable to the company and its existing shareholders. Section 52(3) says that KPL must make an allotment of these shares within 20 days upon the receipt of its consideration. Now, since you are having the opportunity to go through or have the Companies Act with you when you are answering the questions, so that there you can look at these questions and answer. I would advise you not to replicate the section, but very simply write down the meaning of the section. So, section 52(3) says that KPL must make an allotment of these shares within 20 days upon the receipt of its consideration. Once the consideration is received, you must make the allotment within 20 days. Then section 54(1) says that a share is deemed to be issued when the name of the shareholder is entered on the share register. Thereafter, per section 51(4), within 20 working days of the issue of any shares, KPL must give notice to the registrar in the prescribed form of how the number of shares issued, the amount of the consideration for which the shares have been issued, and the amount of the company's stated capital following the issue of these shares. So, that is how you need to answer that particular section of the question. Now, let us look at question number 4. Lakmal Fonseca is a resident of Melbourne, Australia. Where is Lakmal? He is a resident of Australia. He is also the sole shareholder of LF Private Limited, a company incorporated in Australia. So, it is a company incorporated in Australia, LF Private Limited. You see in Australia, the private is spelled or used in abbreviation in different than Sri Lanka, because in Sri Lanka we use as PVT. In Australia they use as PTY. So, now Lakmal Fonseca, the resident of Melbourne, is the sole shareholder of the Australian company LF Private Limited. This LF Private Limited is a registered overseas company in Sri Lanka as well, under the Companies Act 7 of 2007. After COVID-19 breakdown, Lakmal wishes to invest in Sri Lanka in his individual capacity as well, not only by company but also individually, by acquiring shares of a company which has already been incorporated in Sri Lanka, another company. Lakmal has been told that as per Extraordinary Gazette 2045/56 dated 17/11/2017, published under the Foreign Exchange Act 12 of 2017, he can invest individually in such a company. Individually, I mean in the sense that he himself by person invest in such a company, subject to certain exclusions mentioned in this gazette. Further, this gazette also specifies the businesses where Lakmal can invest up to 40% of the stated capital of such company, where Lakmal can invest up to 40% of the stated capital of such company without any special approval from the Board of Investment. So, this is what the regulation says, the gazette. Now, you are required to state 3 exclusions mentioned in the gazette, right. So, let us look at what are the 3 exclusions. So, this is how you need to answer. Per the Extraordinary Gazette number 2045/56 dated 17/11/2017, published under the Foreign Exchange Act number 12 of 2017, a person resident outside Sri Lanka is excluded from investing in shares of a company proposing to carry on any of the following businesses. So, what are those 3? Pawnbroking. Secondly, retail trading with a capital of less than $5 million, and coastal fishing. So, these are the prohibited types of businesses that Lakmal will not be able to invest in. Then 3 businesses where Lakmal can invest up to 40% of the stated capital without any special approval from BOI. What are those? So, in answering, further, per Extraordinary Gazette 2045/56 dated published under the Foreign Exchange Act, a person resident outside Sri Lanka is permitted to invest in the shares of a company proposing to carry on any of the following businesses only up to 40% of the stated capital of such company, unless special approval has been granted by the Board of Investment of Sri Lanka for higher percentage, subject to special approval granted by the BOI. So, what are they? Production of goods where Sri Lanka's exports are subject to internationally determined quota restrictions. He can go for an investment of production of goods where Sri Lanka's exports are subject to internationally determined quota restrictions, like this GSP plus system. Then growing and primary processing of tea, rubber, coconut, cocoa, rice, sugar and spices. Then mining and primary processing of non-renewable natural resources, non-renewable. Then timber-based industries using local timber. Deep sea fishing as defined by the ministry, assigned to subject of fisheries. Then mass communication, then education, freight forwarding, travel agencies and shipping agencies. So, these are the business that he can carry on under the permission to invest up to 40%, but if he wants to invest more, he has to get the BOI approval for that. Then third one is for commercial, trading and industrial activities that are not permitted to be carried out by this LFPL company in Sri Lanka, because it is an overseas company, Australian company. So, for commercial, trading and industrial activities that are not permitted to be carried out by that Australian company are the following commercial, trading and industrial activities are not permitted to be carried out by that Australian company as a registered overseas company, in Sri Lanka. Money lending, other than the branches of foreign banks registered in Sri Lanka under the Banking Act number 30 of 1988, other than the branches of foreign banks. So, you can't do money lending. You can't do pawn broking, then retail trade where the capital contributed by persons resident outside Sri Lanka is less than USD 5 million after such investment. And you can't do coasters fishing like a normal person who cannot do. So, these three also come in addition to money lending, and then growing and primary processing of tea, rubber, coconut and rice, then mining and primary processing of non-renewable natural resources. So, foreign companies can't do this. Then freight forwarding, shipping agencies, mechanized mining of gems and lottery. So, these are the prohibited types of businesses. Now, we go to question 5. Sunroof Private Limited is engaged in manufacture of roofing sheets. Sunroof is engaged in manufacture of roofing sheets. Homes Private Limited is the main supplier of raw materials to the Sunroof Private Limited. Due to COVID-19 lockdown, SPL, the Sunroof Private Limited, suffered significant losses in 2020 and its liabilities have increased alarmingly. As a result, SPL has not paid HPL, Homes Private Limited, because they were the main suppliers of raw materials to SPL. A total amount outstanding of rupees 1 million for the raw material supply on credit by HPL in February 2020. In June 2020, HPL sent a letter of demand to SPL demanding the payment of rupees 1 million. But so far, SPL has not paid HPL. HPL has been told that in addition to the provisions of Companies Act 7 of 2007, there are also 2 tests which are commonly considered to determine companies' inability to pay its debts. Right? So, you are required to analyze with reference to the Act and the above mentioned test whether HPL has grounds to wind up SPL through the courts and recover its damage. Now, this is a case where you are required to find out through solvency test and the other test whether HPL has grounds to, like as a creditor, grounds to wind up SPL through the courts and recover its due. Now, in answering, this is how you need to answer. Section 271 of the Companies Act sets out the companies deemed unable to pay its debt in the following situation: where the company has failed to pay secure, compound and admitted debt exceeding 50,000 rupees, which is payable to a creditor within 3 weeks of the creditor serving a demand, known as a statutory demand, on the company to pay back the relevant sum owed. According to the given information in the scenario, the total amount, outstanding amount, which is rupees 1 million, is more than the stipulated rupees 50,000, and the letter of demand has been sent more than 3 weeks ago, also in June So, fulfill the relevant requirements. Therefore, according to section 271, it is clear that SPL is unable to pay its debts. It is now established. Then according to section 270 of the Act, a company may be wound up by court if the company is unable to pay its debts. Then, for the purpose of making a winding up order, the court may apply either the cash flow test or the commercial insolvency test. Cash flow or commercial insolvency test, or the balance sheet or asset test, in order to determine the company's inability to pay its debts. Now, both cash flow and commercial insolvency part of the solvency test, and the balance sheet or assets is based on the company's real existence as per the accounts. So, these are the types of tests that can be carried out. Then further you can go on explaining the cash flow commercial insolvency test. Under this test, a company is insolvent if it is unable to pay its debts. For this purpose, the fact that the company's assets exceeds its liability is irrelevant. If the company cannot pay its debts in the conduct of its business, then it is insolvent. If the company is in fact paying its debts, the court assumes it to be solvent. The creditors are not expected to wait till the assets are realized. The creditors are not expected to wait till the assets are realized. Under the balance sheet test or the assets test, we say, as per the accounts of the company, this is when the company's assets are insufficient to discharge its liabilities. The idea underlying this test is that it is not sufficient for the company to be able to meet its current obligations of its total liabilities can ultimately be met only by the realization of its assets, and these are insufficient for that purpose. A company is identified as insolvent if either of the above tests is satisfied. Either, make sure either you do the insolvency or you do the asset test under the balance sheet, based on the cash flow or based on the assets. Therefore, it can be seen that HPL has grounds to take action to wind up SPL through courts and recover its dues. This is how you need to come to your conclusion. Now, let us look at the section 3. In section 3, question number 6, both questions are compulsory, 6 and 7. Total marks for this section 3 is 40 marks and recommended time is 72 minutes. Now, question 6. Surat Nadaraja Private Limited is a company incorporated in Sri Lanka under the Companies Act 7 of 2017. Surat Nadaraja Private Limited is a company incorporated in Sri Lanka under the Companies Act. SNPL has adopted model articles given in the first schedule of the Act as its articles of association, and you have been appointed as its company's lawyer. The total assets of the Surat Nadaraja SNPL as per its latest available financial statement is total assets 100 million rupees. The directors of SNPL intend to conclude the following transactions. So, transaction 1 is to obtain a loan from a bank for 80 million rupees by pledging a floating charge over rupees 80 million worth of company assets. Transaction 2, to sell 60 million worth of machinery and equipment belonging to SNPL. Now, the directors have posted the following 2 queries to you. So, you now understand the 2 types of transactions. Now, the directors have posed the following 2 questions to you because you are the company lawyer. Do the above transactions fail within the scope of a major transaction? And what type of resolution is required to enter into each of the above transactions? Now, let us look at the first one. Do the above transactions fall within the scope of major transaction? Transaction 1. Here the loan for rupees 80 million is greater than half the assets of SNPL, which is 100 million. Therefore, this looks like a major transaction because it is more than half under section 185 2C of the Act. However, per section 185.3, a floating charge over all or part of the company's assets is exempted from being treated as a major transaction. Floating charge over all or part of the company's assets is exempted from being treated as a major transaction. Therefore, this transaction 1 is not a major transaction under the Act because of that section 185.3, because it says 185.3a says a floating charge over all or part of the company's assets is exempted from being treated as a major transaction. That is the reason. So now, as SNPL has adopted the model articles under Act, it implies that the directors have the power to enter into this transaction without seeking shareholder approval, because this cannot be considered a major transaction. That is the reason. Therefore, a resolution passed by the board of directors of SNPL is merely enough to enter into this transaction, and the directors do not have to go and seek shareholder approval there. Now, if you look at transaction 2, here the value of assets, now that is the answer for the question. What? Do the above transaction fall within the major transaction? So, second one is to see transaction 2 is a major transaction. Now, here the value of the assets to be disposed is 60 million, is greater than half of the assets again of SNPL, which is 100 million. Therefore, this falls under a major transaction per section 185.2b of the Act. As SNPL has adopted the model articles under the Act, it implies that shareholders had not given approval for this transaction at the time of incorporating SNPL. Therefore, a special resolution passed by the shareholders of SNPL is required to enter into this transaction because it is considered a major transaction there. It is considered a major transaction there. Because it falls within section 185.2b of the Act as a major transaction. And then the answer is, do the above transactions fall within the scope of major transactions? So, you have to clarify first one and the second one separately. Say transaction 1, as we saw, that it won't fall within the context of major transaction, but second transaction falls within the context of major transaction. Now, next question is, what type of resolution is required to enter into each of the above transactions? Now, we revisit that and see in first transaction, as we here say, therefore, resolution passed by the board of directors is enough. Whereas here, as it's a major transaction, the resolution should be passed by shareholder meeting. That's the answer there. Now, let's go to the next question, question number. So, you are required to explain the answers to the queries of the directors with reference to the Act that we have done. Second one, part B of question number 6. Godwin Company Private Limited was incorporated under the Companies Act 7 of 2007. And its articles of association in its objects clause states that the object of GC is to carry on the business of importing vehicle spare parts. Godwin Company Private Limited was incorporated under the Companies Act and its articles of association in its objects clause state that the objective of GC is to carry on the business of importing vehicle spare parts. After the COVID-19 outbreak, the business of the company suffered due to import restrictions having been placed by the government. As a result, the directors of GC have proposed that the nature of business of GC be changed to that of promoting tourism. Now the directors wish to change the name to GC to Tourism Company Private Limited TC and change the object clause of the existing articles of the company to reflect the change in the nature of business to that promoting tourism. Now you are required to explain by referring to the act the procedure to be followed in changing the name. First of all, we will look at the provisions with respect to the changing of the names. I have dealt with these things, so let us see how you should write your answer. Now, per Companies Act, the procedure to change the name of GC would be as follows. Obtain the prior approval of the Registrar of Companies for the proposed name Tourism Company Private Limited. Once approval is obtained from the registrar, the company must pass a special resolution of its shareholders to change its names to Tourism Company Private Limited. And within 10 working days of passing this special resolution, the company must inform the registrar through the prescribed form 3 about the name change. After receiving the certificate from the registrar for the new name, within 20 working days of the date of effect of the name change, public notice must be given of this name change. This notice must include the former name, company number, address of the registered office of the company, and the new name of the company, all these things. Then further notice must be published in a daily newspaper in Sinhala, Tamil and English as a public notice and in one issue of the Gazette in order to effect that. So that is how you have to answer that particular question of the name change, the procedure involved. Then the second one, in changing the object clause of the articles of the company to that of promoting tourism. How are we going to do that? In the articles of association. The Act allows the company to change its object clause, and this will amount to an alteration of its articles. Per Companies Act, the procedure to change the object clause in the articles of the company would be as follows. A special resolution of the shareholders of the company must be passed to alter the articles. Special resolution, because this is very important that you are amending or altering the objects of the company. Then once the special resolution is passed, the full text of the resolution setting out the alteration of the articles must be provided to the registrar within 10 working days of the passing of the resolution. That is how you need to do it. Then question number 7, part A. You are a director legal of Jackson Company Private Limited. The following incident is taking place at a board meeting of JC. Following incident is taking place at a board meeting. You are a director legal. The company secretary informs the board that Ranapala, a director of JC, had not attended any board meeting for the last 6 months and is not answering the telephone calls and emails of the company. Neither has Ranapala given notice of his resignation as a director. As a result, the majority of directors are of the view that Ranapala must be removed from the board of directors of JC. The articles of JC are silent on how to remove a director in situations such as this. The chairman proposes to pass a board resolution immediately and remove Ranapala from the board. You are required to explain whether Ranapala can be removed as proposed by the chairman by referring to the correct procedure that must be followed in this instance. So you need to look at the removal of directors in a company. Removal of directors. Since articles of JC are silent on the removal of a director, JC will have to follow the provisions of the Companies Act to remove Ranapala as a director. Per section 206 of the Act, a director may be removed by ordinary resolution of the shareholders at a meeting called for the purpose of removing a director. Therefore, it is not possible to remove Ranapala from the board as proposed by the chairman. It is not possible to remove Ranapala from the board as proposed by the chairman. The procedure to be followed to remove Ranapala from the board would be as follows. How to remove? Call for a meeting of the shareholders. The notice calling this meeting must state that the purpose of the meeting is to pass an ordinary resolution to remove Ranapala from the board, but it is not compulsory to give reasons for such removal in this notice. When the notice is given, Ranapala has the right to make representation within 14 days of such notice. If such a representation is received from Ranapala, JC is required to circulate it to its shareholders or read it at the proposed meeting unless JC obtains permission from the court not to do so. Thereafter, at the proposed meeting, the shareholders have the right to remove Ranapala by passing an ordinary resolution. So that is how Ranapala as a board director be removed from the company. Then B of question 7. You are a company secretary of Blue Builders Private Limited. Blue Builders Private Limited held its annual general meeting on 30th September 2020 at Union Place, Colombo 2 at 9:30 a.m. As per attendance sheet marked by at the AGM, the following had been attendance. Amal Kure, Chairman and Main Shareholder, Vimal Sirisena, Shareholder Director, Kamala Sirisena, Shareholder Director, Shanika Silva, Company Secretary, Ashan Perera, representing the Company Auditor. At the AGM, the following decisions had been taken by the shareholders. What are the decisions? Approval of the minutes of the last AGM held in 2019, approval of the directors report for 2019-2020, approval of the audited financial statements for the year ended 31st March 2020, approval of a dividend of ₹7 per share as final dividend for the year 2019-2020. Then reappointment of audit associates, chartered accountants as the company auditor for the financial year 2020-2021. The AGM was adjourned at 10:30 for fellowship. You are required to prepare the minutes for the AGM of BBL. Now this is purely a secretary's task to prepare the minutes of the AGM of BBL. You may assume any names for these proposing and seconding the minutes. Now how to draft such minutes? So you can say Blue Builders Private Limited, minutes of the annual general meeting of Blue Builders Private Limited for 2020 on 30th September. Present, Amal Kure, so all the names of the present gentlemen and ladies who were there on the official capacities to be mentioned. Then minute number 1, notice of the meeting was taken as read. Minute number 2, minutes of the last AGM been placed, and then you have to mention who has proposed, who has seconded. Then minutes number 3, director's report. The shareholders approve the director's report. The approval has to be there, proposed by somebody, seconded by somebody. Then minutes of minute number 4, audited financial statements for the year ended 31 March 2020. The shareholders approved the audited financial statements of the company for the year ended 31st March 2020, proposed and seconded. Then minute number 5, declaration of dividends for 2019-2020. That's also a very important thing. The shareholders approved a dividend of ₹7 per share as the final dividend for the year, then proposed and seconded. Then minute number 6, appointment of auditor for the year 2020-21. The shareholders reappointed audit associate, so it can be either reappointed or appointed a new one. Auditor associates, chartered accountants as company's auditors for year 2020-21, proposed and seconded. As no further items were presented for resolution or discussion, the meeting was adjourned at 10:30 a.m. for fellowship. Confirmed as correct, Chairman, to sign the minutes. So this is how you need to answer your question paper and I advise you all to revisit this paper and go through and find out what are the very basic elements that you need to answer. And if you give more case law, supportive examples, and the relevant case laws that I have discussed in the class lectures, those will be very useful. In your in getting more and more marks at the examination. So I think with that we have covered the March 2021 examination paper, and can follow up how in answering. I have shown you how to answer the questions. You have to be very careful in doing so. I know a lot of students fail in exams because of their panic or the rush in answering, and those things really lead to students taking low marks or fail exams. So nothing to worry. Only thing is that you have to concentrate properly. We have learned everything what I have taught. Revisit everything and listen to all the webinars that we have done. Follow them and have a proper preparation as to the Companies Act in the relevant sections, because if you have a hard copy of the Companies Act would be very more helpful to you, because then you can very simply turn the pages and find out the relevant sections, as you have very limited time in the examination, so you can't be scrolling over and up and down in the e-version of a Companies Act. So I would very much advise you to have a downloaded or hard copy of the Companies Act, and then mark the different sections so that for easy reference you can find out by placing certain marks outside of the book or the hard copies. Then you can find, for example, if you say how to remove a director, then you can very simply turn to that particular page in order to find the particular provisions. And also it would be better if you can simply connect some case law as well, what I have given in the class, in the lectures that we did. So with that, I would like to thank you all for listening my lectures series as well as the examination preparation, because it will give you a lot of confidence in your examination. And I wish you all a very successful examination for all to face and obtain some very good marks. So we do not know what are the questions that are coming, but if you thoroughly go through the areas that we have covered, that would give you a lot of preparations and confidence in facing your upcoming examination. And thank you very much.